Imagine a publicly traded company announcing that it has secured nearly $121 million in contracted future revenue that is already locked in, already scheduled, and already backed by binding long-term charter agreements. Imagine that same company operating two modern eco-designed Suezmax tankers that have produced multi-million dollar profits year after year, vessels that in strong tanker cycles routinely command valuations of $30 to $40 million each. Imagine that this company has just unlocked roughly $14 million in fresh liquidity through a textbook sale and leaseback refinancing, a liquidity infusion more than 10 times larger than its entire public market capitalization. And then imagine the same company trading for less than $1 million. If your instinctive reaction is that this cannot be correct, then this is exactly why you need to stay until the end, because the trading strategy based on the current conditions appears in the later part of this video. If you are watching this through Shorts, you need to use the full version link below so that you can hear everything, including the strategy section, without interruption. If your sense of disbelief is rising, that is the right response. When the market values a functioning, profitable, asset-backed shipping business like a distressed penny stock drifting through the market with no anchor, something structurally extraordinary is happening. This is the paradox that defines Rubico Inc., ticker RUBI. And this emotional jolt is the right point to begin. To understand how this inversion formed, we need to reconstruct the sequence with accuracy. The origin sits in June 2025 when Top Ships Inc., a Greece-based tanker operator, announced that it would carve out two of its most efficient and profitable vessels, the Eco Malibu and the Eco West Coast, into a separate publicly listed entity called Rubico Inc. In a normal spin-off, the parent transfers assets to the new company, sets a record date for shareholders, distributes shares proportionally, and the new entity enters the public market with a stable share count and a clean balance sheet. Investors then have time to evaluate earnings and asset valuations. Rubico's launch matched these expectations at first. The two eco-designed tankers had displayed consistent profitability in previous years, roughly $17 million of net income in 2022, about $7 million in 2023, and approximately $6 million in 2024, supported by revenue near $24 million annually. When Rubico's registration became effective in late June 2025, its capital structure displayed roughly 3.6 million common shares, about 100,000 Series D preferred shares, and 75,000 privately placed common shares at $20 each that raised about $1.5 million. Structurally, the company looked compact and matched the scale of its assets. By August